Good afternoon, traders, and good morning in the case of UK and European traders. But you just have a look at the way that the market's positioned. You know, we've again seen very limited moves playing through in Asia. Asia is just a snooze fest. We react and we get ourselves ready for what sort of bigger moves that you see through European and US trade. Specifically on that sort of European or UK to US crossover is when you tend to see the volatility. But Asia has been sort of devoid of a pulse for some time. Now that may well change tomorrow because at midday, Eastern Daylight Time, we get the RBNZ meeting. Actually, if you have a look at the chart of overnight implied volatility in Kiwi dollar against the US dollar, you can see that's 17.5%. That's the highest since I think August of this year. So certainly very, very high levels. You'd expect that given the dynamics that are playing in the Kiwi dollar. If you're running Kiwi exposures, just remember tomorrow at this time, you've got a big central bank meeting. The market after today's news, and today's news we got two-year inflation expectations coming in at 1.8%. That was lower than what the market was looking for. Previous call was 1.86%. So it's reinforced that the RBNZ probably need to do something tomorrow. You can see the expected move or the probability of a price move tomorrow or a move in rates at 76.4%. Probably around about 60-70% of economists are also calling for the cut. So obviously the move in the Kiwi dollar comes if they keep rates on hold and they give an outlook that suggests that they're on hold for a period of time. So that's definitely something. If you are running short or long positions in the Kiwi, do be aware that tomorrow there is an event risk in the RBNZ meet, something that you do need to be concerned with. Have a look at equity markets. You can see they're down very modestly. Our opening calls for Wall Street down 32. You can see our opening call for DAX pretty flat. FTSE as well down 1 point, so very much unchanged. We are watching in terms of equity markets in the near term. Have a look at the German market because we've got the ZEW confidence numbers coming out at 9 o'clock Eastern Daylight Time. There's no survey for that, so I can't tell you what's expected from the market. But the trend has been, last couple of months, has been improvement, although it's still very much in negative territory. And there is a decent correlation, or has been a decent correlation, between the ZEW confidence numbers and also from the ZEW and the DAX as well. So we are watching that one pretty closely. We're going to US trade. And we can have a look at what's happening in Trump. We know that Asian markets have been under a little bit of pressure in the last couple of days, more so because of the scenes we've been seeing in Hong Kong and the political unrest, and it's taken a decisively ugly turn. And also we're keeping an eye firmly on the funding markets here in Asia, looking at Chinese and more specifically Hong Kong funding markets. We've seen HIBOR rates moving up a little bit there. Probably going to have to see that being dealt with, a liquidity injection from various central banks in that regard. But certainly, we have been seeing tighter funding markets, and you've seen a little bit of a sell-off coming through in the CNH. But I think probably the bigger driver of global markets takes place with Donald Trump speaking probably midday local time in the US, and he's going to be having a conversation about, or a speech about about trade specifically there, and policy as well. So there is definitely going to be some event risk there, and that's something that you do need to be concerned with if you're running positions over that. Certainly dollar CNH or anything that's sensitive to what's been happening in US and China, which is pretty much everything at the moment. Do be aware that Donald Trump will be speaking, and he will be talking about trade and what potentially is going to happen there as well. Obviously we have been hearing him saying that a deal will be done. We're not sure if there's going to be a rollback of those tariffs. So do keep an eye on what's been going on there. But certainly Asian markets under a little bit of pressure. I think Hang Seng it seems to be a bit of a sell on rallies kind of candidate at the moment. We've seen the market opening at its highs. Traders come in and fade that move pretty much straight off the bat. China down 59. You've got the Nikkei holding firm on the session there. The ASX 200 down 31 points. Materials there. Anyone holding FTSE positions for that market to open, do be aware that the materials sector here in Australia is down 0.6%. In fact, all sectors are down, bar staples and also tech. So it's been a fairly defensive position market today, as you'd expect when you see the market down by that tune. On the currency side of things, as I say, it's all about the Kiwi dollar for me, watching that one very closely, and also anything with sort of China exposure and ahead of the Trump speech tonight. We've also got Richard Clarida speaking, the vice chair, the architect behind Fed policy. The market looks at him above everyone else, and see if we see anything about what's been going on in monetary policy settings, and the market seems to have found a pretty happy place at the moment in terms of this wait and see approach. So something we're watching, and obviously gold very much in focus there, but very much devoid of any kind of big news today across Asia. One thing we have been talking about with clients is Brexit. the idea that Farage may be standing aside on something like 317 marginal seats, therefore allowing the Leave vote to go more concertedly to Boris Johnson and the Tory party. If you have a look at the betting odds at the moment, you've seen that a majority now, i.e. Boris Johnson, the Conservatives getting over 320 seats, is the clear favourite. So that's something that has been enthusiastic to pound traders. We saw that trade up to 129 overnight, but as you can see now, we're trading 128.55, so down a little bit from those highs. Euro sterling, check that on the daily chart because that looks like it wants to break out to the downside. It's been trading in a bit of a channel last few days or so, but that looks like it might want to break to the downside. Something that you want to keep on your radar there with those sterling flows. Longer term, I'm still pretty bullish on the pound, despite having a decent current account deficit, about 6% of GDP. But that said, it's really down to that majority and something that we are talking and we'll be exploring much more in the next couple of days.